So now I want to invite up Mr. Richard Lord from HSBC, who is going to talk a little bit about some of the work that they're doing in this space and some of the work we're doing with them. So Richard, welcome.
Thank you very much. Well, that's a tough act to follow. You did a good job waking you all up after lunch, so thank you very much, Peter. And do look after my data. You've got a bit of that up there as well. Sorry. I'm going to talk a little bit about HSBC and what we've been doing in the blockchain and distributed ledger world. I guess, there's lots and lots of use cases out there, and there are a few things about what it's like to be a bank, and in particular, what it's like to be a big bank. That very much shapes the way that we go about evaluating and assessing this technology. And so I'll tell you a little bit about our journey so far, a little bit about where we're focusing. A bit more? Okay, well, sorry. A little bit more about where we're focusing our efforts and attention, and also about some of the things we've learnt along the way. So, HSBC, I know we have a reputation for being a big old bank, but we're actually really quite innovative. We've been working with this technology now for 3 or more years. And when I say working with it, I mean proper teams, proper projects, money behind it, really working to understand what this technology is and how we can use it to provide a better service or a better product for our customers. As we've gone through, we've looked at everything. We've looked at DLT, we've looked at multi-party computing, we've looked at some of the early hash stuff that was going on, mesh hashes and all that sort of stuff. And the thing that we keep looking for, or what we've found, is that we're honing in a bit on blockchain and really on how we can use blockchain technology as part of the infrastructure and the way that we service our customers. However, having said that, we're a bank, and we are a very regulated bank. And as a result, we have to be very careful to make sure that the things that we are doing are not only in line with the regulations are there because they need to be there to protect consumers and businesses in the market, but also because one of our greatest assets is trust. And we need to make sure that everything that we do is going to be able to, or is never going to compromise or put at risk the trust that our customers put in HSBC. And so we're very conservative. We do take a long time to understand not only the use cases and the opportunities, but also the potential risks and how, if there's ever a chance we might breach that trust, how we need to mitigate and control for that risk. Our journey is that, as I say, we've sort of gone in a bit boots and all. We have a wonderful team in the Asia Pacific region that reports into me. It's a good-looking bunch of people over on the back table there. And we call them our next-gen technology team. And the next-gen technology team has been working on a few things. Number one, we've been doing some exploration, as I say, really working to understand the technologies and see how we might be able to, how to use those technologies. We've been participating in a lot of things, a lot of trials, a lot of pilots, working with a range of different vendors. And over time, we've built up some very, very strong partnerships. We've got partnerships on things like with organizations like IBM and Consensus, Digital Asset, Red Data, of course, and now the BSN. Starting earlier this year, we've formed a partnership with BSN. We're big. We're in about 60-odd countries, and we process an enormous number of transactions, billions and billions and billions of transactions in any given time period. As a result, the things that we do, we tend to have to look at with a global lens. And so a lot of our work in blockchain technology and next-gen technology has really been about understanding or looking for opportunities where we can apply this technology at scale. And scale and availability. We all get a little bit miffed if the ATM doesn't work, or if our credit card transaction doesn't go through, or if our money transfer doesn't happen when we expected it. And that sort of resiliency and availability is what we expect from the technology that we apply to all of our customer use cases. Well, as of right now, we have about 10 or more, a bit more than 10, pilots and projects in flight. And they are around the world, and they are across various industry segments. And of course, one of the things that we have to spruik the sponsor a little bit, but one of the things we are really enjoying is our new partnership with BSN. And working with BSN, we're looking to understand and explore practical applications of these business cases. and look and understand how, when you take an idea and you turn it into a pilot, and then with the view that you're going to turn it into a product or service for our customers, how it's really going to work, how it's going to work every day, how it's going to work for every transaction, how we're going to make sure that they're auditable, that they're processed properly, that that the right checks and balances are in place, and that what we're delivering is an industrial grade robust solution that, as I keep saying, comes back to adding value to our customers. So the sorts of things that we're looking at and the areas that we're focusing are central bank digital currencies. If there's a central bank digital currency project anywhere in the world, we're pretty well in it. And have been for a long time, right from the early adopters. I mean, we could talk for hours on programmable money and central bank digital currencies and all that sort of stuff, but it's a very exciting and high potential area of opportunity for the use of this technology. Securities and bond trading, where we're digitizing assets and using smart contracts to obviously to improve the documentation flow in those transactions, but also to improve the integrity of the data and the auditability of the data that's in those transactions. And as an extension to that, and then growing from that, we're also doing a lot of work in payments and settlements. And in fact, I'm very pleased to say we hold a patent in a technology that allows us to bridge between on-chain transactions and traditional payment rails, automating one of the more cumbersome steps in the transaction flow for some of these security and trading type applications. And then, of course, the big one, we're doing a lot of work in trade finance. And trade finance was a very early validated use case, because obviously the opportunity for us to digitize and standardize the plethora of documentation that exists in trade. I don't know if any of you have worked in trade finance, but if you just think about the variables for every country having its own documentation, every shipping company having its own documentation, every importer and exporter, etc., having their own documentation, the paperwork gets ridiculous. And any opportunity to standardize and streamline that, digitize that in a high integrity way, is the holy grail for the trade finance industry. So what have we learned along the way? Well, we see lots of opportunity. And the opportunity is really about looking at where we see, I guess, friction in transaction flows. I guess the opportunity to improve the integrity of data, to improve the by improving the integrity of data by adding to the integrity of markets. So things like supply chain, things like trade, bond and securities trading, etc. But also opportunities to try and speed things up. One of the things, of course, we've all noticed is that the speed of commerce has accelerated immeasurably over the last 20 odd years or so, and it's probably only going to get faster. And so we look for opportunities to remove friction in transaction flows that will enable us to keep up with and maybe even accelerate that speed of commerce. We're looking for new forms of solutions, and those are the things that do involve areas like trust, data integrity, resiliency. The fact that you can distribute the ledgers, you can build in inherent resiliency in the network architectures. All of that stuff is important because we are a global business in a global economy. We can't work in a batch job world anymore. We need to be available 24/7, and we need to be processing the transactions and data as they happen anywhere in the world. And then we're looking beyond banking, where I guess the principles of KYC, know your customer, before you're able to do any transactions with them, become harder and harder in a networked economy, and particularly in a networked economy where you're moving at pace. And so blockchain technologies and the likes provide an opportunity to leverage the inherent trust that you can build into these platforms to enable us to maybe do business with customers a little bit earlier in that KYC journey. But of course, we have to be careful. Money laundering is a concern. Inappropriate use of funds is a concern. And so we need to make sure that we're doing this in a very high integrity, robust and sustainable way. What are the things that we're finding a little bit challenging? Obviously conservatism. Yeah. The banking industry's worked the way it has for a long time. And I guess, we have a history of wanting to see how things play out. And sometimes quite rightly. It's one of the reasons why we've stayed away from tokens. And the recent extreme volatility in the token industry and some of the collapses of the exchanges and things like that. There's lessons to be learnt there in terms of how those things can and should or shouldn't be done. We also see that the lack of industry standard is a real inhibitor to growth. I know everybody wants to own the platform. Everybody wants their token to be the token, or their blockchain to be the blockchain, or their technology to be the technology, and hopefully make a mozza on the way through. But the reality is that there's too much choice. It's like everybody's got a different fax machine and nobody can send a fax to each other. And all that does is create complexity and risk. And when you have to deal with volume, when you have to deal with high integrity transactions, and you want to move at pace, it's just counterintuitive to have this proliferation of technologies and the likes out there. The business model still has a long way to go. I always say that in business, despite appearances, I'm actually quite old, and I've been around internet technology for a long time. And I always say that commerce has natural places for organizations to land. And those natural places are where they can really add value and extract the right amount of return for the value they add. And I think there are a few cases out there right now where some of the players aren't really landing somewhere natural. They're trying to create a new place for themselves where they don't really logically fit, or they're trying to take too much out of the value chain for what that then is justified by what they're offering to the transaction process. And it's going to take a while for the industry to work that out. Who belongs there? Is it logical and sensible that they're in the value chain? And are they taking the right amount out for what they're adding to the process? And the last one is performance. Transactions per second, boring old stuff on tin. We process billions of transactions every day, trillions over a year. And if somebody comes and presents us with a transaction processing platform at 5 or 10 or 20 or 100 transactions per second, that's interesting and proves the technology works. Come back and talk to me when you've got 100,000. Because we have to process and transact for today's internet volumes. And one of the real challenges about doing commerce and transaction processing in today's modern world, we don't enjoy nice, smooth, linear peaks anymore. We don't have the natural control of feeding the numbers into the machine with a gentle batch. We just have to plug into the network and take the transactions as they come. Well, what happens on Singles Day in China? What happens on Black Friday in the US? We have to be able to scale and be elastic for enormous peaks in transaction volumes, because everybody wants their transaction to go through immediately and everybody wants their transaction to go through flawlessly, and the technology needs to be able to support that. That's really my short presentation. I do thank everybody for the interest and the energy that you bring into this industry, and in particular in Hong Kong. I do think Hong Kong, we are very much at the forefront of innovation in the use of blockchain technology and the next gen technologies that will come. We're very pleased to be partnering with BSN and with others that are in this room today. And we're also interested in learning. And so please do get to know Fred Kwan, who's sitting over in the corner. He's the guy who runs my next gen team. Please feel free to reach out to me. We're always open to listen to new ideas. But when you do come and talk to us, just remember we're a big old bank, and we do have to do things at big bank scale. And with that, I thank you for your time.